Hello and welcome to the Small Business Briefing. I'm Brian Calley, CEO of the Small Business Association of Michigan.
Hi, Brian. Welcome back. It's been a few weeks since you've joined us on the briefing, so it's good to have you back today. We do want to start with a welcome to one of our new members. They are an elite member and also one of our 50 companies to watch winners for Michigan Celebrates Small Business this past April, and that is Kids Court LLC and owners Jamie and Jeffrey Hess. So welcome to SBAM. Okay, so Brian, some big news at the end of last week about the bill that President Trump signed on July 4th. There are a few specific details that are relevant to our Michigan small business owners, so I'm going to let you take it away.
All right, very good. So what I want to do, I spent some time over the weekend just going through articles and analysis. Um, to be honest about it, I didn't read the bill because it's a different language, but as going through the several different organizations that had put together analysis and trying to pull out the parts that seemed most relevant to our members. This is not a value call in terms of like the bill as a whole. I know that's quite controversial, but part of what I wanted to do, and I think maybe I'll do an article later on this week to lay out some of these things that I'm talking about here that I just don't want you to miss when it comes to the changes in the tax code in particular. There are a lot of non-tax code issues in the bill as well, but really a focus here on things in the tax code. First is that the 100% bonus depreciation was extended, and qualifying equipment and property purchases like machinery, computers, vehicles of that nature. You have an option to, it lowers your taxable income if you depreciate it all straight away instead of spreading that over time. And so that bonus depreciation was extended, and and it appears as though it actually goes back and you could amend the last few years since it had expired in 2022. Also, for those same years, 2022 through 2025, there's the ability to deduct full research and development costs as well. So there was an issue with those of you who have R&D costs where you might have a big project and a lot of it is R&D, and you have all this income from the R&D work that you're doing for somebody, and you can't expect, and it's mostly labor, and you can't expense all the labor. You have to spread that over the course of um, of 5 years. And so it created a scenario where you have a big tax bill. That got, I'm going to call it corrected. I think it was a big problem that it didn't get extended back in 2022. So you could go back in 2022, 3 or 4, and then also it stands for this year, although it expires at the end of this year. So I think there's still some uncertainty in this. But in both of these depreciation and amortization issues, the bonus depreciation and the research and development cost amortization, you can do the full expensing of it in the current year. For some of you, it is going to make sense to go back and redo tax returns over the last couple of years. Okay, so again, if you had R&D expenses, um, the let's see here, several things. Let's just touch on the highlights here. Um, Increased business interest deduction. So there's more flexibility in how much interest on business loans that you can deduct. It reverts back to the more generous EBITDA, the earnings before interest, taxes, depreciation, and amortization, and instead of just the earnings before interest and taxes. Okay, so um, you can, in other words, you can the amount of the interest you can deduct gets higher because you can add back both the depreciation and the amortization expense. Okay, employee retention credit. That window is closing pretty fast. It's actually not too late for some of the periods. It is for some of the periods, but not too late for all of the periods. Um, but it's very clear that they're intending to close that window pretty quickly. Oh, they expanded the 1099 K reporting threshold. Or I'm sorry, they delayed the expansion of the 1099K threshold. And what this is for is if you get paid through services like Venmo or PayPal or Square, um, they were going to apply a $600 threshold for when you have to provide a 1099. And so like for a lot of organizations, that would be a lot of expense and paperwork. So the existing threshold remains in place, at least for now, at which is $20,000 and 200 transactions for the year. Let's see, there was no change to the 20% QBI deduction. If you know what that applies to, you know what that means. And then, yeah, I think that's and then another no change I just wanted to mention that affects probably most small business owners. There was a lot of talk on increasing the state and local tax deduction on your personal taxes. So you have the flow-through taxes to your personal tax return if you're an LLC, a partnership, so S corporation or sole prop. You could there's a limit on how much state and local taxes you can deduct on your federal taxes, and that limit is pretty low. Most business owners would hit it. There was a lot of talk about increasing that, and it did not get increased, so that stays the same. Those are some of the items that stood out to me that would have a pretty broad application or potentially broad application to business owners, in addition to the ones that you already probably know about, which was that the tax rates themselves were preserved. So the 2017 passed, and I think it went into effect as the 2018 probably tax year. And the returns that you would have filed in 19, those tax rates stayed in effect. They didn't expire and go up. There wasn't a new tax bracket created like there was some discussion on. Essentially stayed the same.
And then there were a few notable things that pertain to employees. So what are the relevant changes there?
Okay, so for your employees, a couple of things to note that people may or may not want to change the amount that gets withheld from their taxes based on these items. So the standard deduction did get increased. It right now is 37 or I'm sorry, $13,850 for a single and 27,700 for joint filers. That's the standard deduction that just everybody gets. That got increased to 15,000 and 30,000. So the amount, in other words, the first 30,000 in income and joint filers and 15,000 for single filer is now federal tax free. And then the child tax credit was both increased and made more refundable. So if you have more kids, this one gets bigger. It doesn't really start to get phased out until I think over 400,000 in a joint filing. So for the vast majority of workers, this is going to apply. The let me see here. Thought I had it written down what the child tax credit. So it increased from 2,000 per child to 2,500 per child for ages 6 to 17. But if you have a little child, 0 to 5, it's 3,000 per child. And again, mostly refundable. So even if your income is low and you don't really have much in income taxes, it doesn't matter. You still get this credit. It comes in the form of a return. So by making it more refundable, it means that if the tax credit exceeds your total liability paid, they just send you the money. And so those are probably the two biggest things that I could see coming out of this that would affect many working age people. And there's, I'm sure, more that will come out over time. I will do an article on this, but I think it probably would make sense to proactively ask your tax professional, though, have you seen anything in my, or do you know anything about my activities over the last few years that would, where it would make sense for me to go back and refile a previous tax return to take advantage of some of these changes? For some of you, the answer is definitely going to be no, but I'm quite certain that a few of these chances or a few of these items, the answer could be yes.
All right, well, thanks for that update, Brian. Let's go back in time a little bit, a few weeks ago, I think, and talk about the Federal Reserve and what the decision was regarding interest rates.
The Federal Reserve did hold their normal scheduled meeting, and it was on the heels of new inflation data, which actually looked pretty good. Um, and it was still a just hold fast where we're at decision. There are a couple of things that were happening. There's a lot of prediction of a softer economy and a softer labor market. Now, after the Federal Reserve meeting, the jobs numbers came out and were a little stronger than people were expecting. I think probably the Federal Reserve already knew that. But what they're seeing is that as long as the jobs market stays strong or relatively strong, they are not going to fear inflation, or they're not going to fear a recession more than inflation. And therefore, this stalemate of just keeping interest rates the same, to me, looks very likely to persist for a while. In fact, once I saw the jobs numbers come out and the level that they're at, we'll cover them in Data Monday here in a little while. But when I saw those, that told me that it's like, that sound you hear is any trace of a summer rate cut slipping away. Like, it's just, to me, these conditions look like status quo. Like, they don't want to change anything. The jobs market looks fine at the moment. Inflation looks fine also at the moment. And so which way do you go with this? It did spark off a new round of conflict between the president and the chair of the Federal Reserve, Jerome Powell. We definitely saw some reaction to it, and I think even an accusation like the Federal Reserve is trying to tank the economy. As I look at it, though, I do understand why the Federal Reserve is just holding close, because like they don't have inflation where they want it and the job market looks fine. So like making a change to juice the economy at the moment, if that were to end up touching off inflation with other kind of question marks that exist out there, um, it's just a conservative group. The way that they make decisions, the way that they approach things, they're going to favor traditionally and culturally, that organization, the Federal Reserve, favors a more conservative or cautious approach. And it's difficult for me, unless you see the jobs market soften significantly, it's difficult for me to imagine them changing it. So I say there's no hope of a summer like in July. There's no hope that they're going to cut rates. The But I'm starting to wonder whether or not it's even possible this year. So I think the betting markets say there's about a 50-50 shot of, second half of the year rate change. Um, I wouldn't take those odds. I think the chances of rate cuts late in the year are kind of slipping away at the moment. And so I think if if you have capital needs and you're just kind of waiting and trying to time things out, I think you might be waiting for a while. That if the project doesn't work at current rates, it probably doesn't work for a while.
All right, so let's talk next about some employment numbers. What can you tell us about the latest data?
So for the state of Michigan, we're going to talk in Data Monday about the national employment numbers. For the state of Michigan, we actually did see a tenth of a percent decrease in the unemployment rate. So this is the first decrease in quite a while. Now, if you've been watching the briefing for a while, you'll know that I'm not a big fan of the unemployment rate. We always cover it because it's what people want to know and kind of how people measure the economy, but it can go up and down for good and bad reasons. And our labor force participation actually edged down about the same amount. So even though the unemployment rate went down, it wasn't because of an expansion of jobs, it was because of contraction of the labor force. So not a particularly good reason, but also, at least it didn't go up. It had been going up and and it for over a year. So, maybe it's going to hang out where it's at for the moment. Um, the the federal unemployment rate stayed static at 4.2, and Michigan's came in at 5.4. So Michigan is still the second highest in the country. It's uncomfortably high, but not like at a level that's scary high, like, say back in 2009 when it was 13, 14%. Um, but overall, I would call this basically a status quo employment report, even though the rate kind of edged down a little bit. That was as much because of labor force as anything. So, looking the other thing that I just out of curiosity, let me find it here. I looked up the others that were around Michigan in terms of, the higher unemployment rates. California, among others, Kentucky, Ohio, Rhode Island, and Nevada. The And then in terms of lowest unemployment, it's been South Dakota, seemed like for a long time now, 1.8%. That's partly because there's hardly any people in South Dakota. So their labor force is always smaller than what they need. But actually North Dakota and Vermont were second and third in terms of the lowest. So a pretty status quo type of unemployment report for Michigan this year or this month.
All right, now it is on to our regular segment, I believe, which is Election Watch 2026.
Yeah, this one just doesn't ever cool off. There's always something new that is happening. I thought we'd feature a new entry into the gubernatorial race on the Republican side. So this is getting to be a very crowded field. Tom Leonard got in, former Speaker of the House and a person who had run actually twice against Dana Nessel, very close losses to Dana Nessel for Attorney General in previous elections. Um, Tom Leonard, former speaker, had worked for Plunkett Cooney as an attorney, um, and um, and jumped in the race. And what was notable about this, not that he got in the race, I had heard that he had been doing some meetings and was thinking about it. But what this tells me is that on the Republican side, for the Republican field, that the Trump endorsement is still very much in play. I think in the past, because Trump had endorsed John James, who was another candidate for the Republican nomination for office, in the past, because of that endorsement, a lot of people thought, oh, James must have that locked up. Tom Leonard would not be getting in this race unless he had a pretty good indication that there wasn't a forthcoming endorsement of James by the president. So this makes the Republican primary look more interesting to me. Keep in mind, there's multiple candidates in there. Senate Minority Leader Eric Nesbitt has been out there for a while and has raised millions of dollars, working hard at the candidacy too. Mike Cox, former Attorney General, also in the race, put seven figures in himself to get it started. You have to take that seriously too. So the Republican side started to look a little more interesting. Among the Democrats, no changes in the field that I can see. The Benson still looks like the front runner to me. Has been the whole time since she got in. On the Let's switch over to the U.S. Senate. And the U.S. Senate, the interesting development that I saw there was that Mike Rogers, former member of Congress, running for the Republican nomination, and seem to be in pretty good position. You heard last week, I think Kelly talked about Bill Huizenga, member of Congress, jumping in that race maybe in the next few weeks. That looks fairly likely. But what was kind of interesting and a bit surprising is that a couple of current members of Congress, Bergman and Wahlberg, so Bergman from the north and Wahlberg, who the lower part of the county, the extremes of the county in terms of north and south, or the state, I mean. Those two members of Congress kind of proactively endorsed Rogers, which I kind of took as maybe a message to Huizenga, Congressman Huizenga, before he gets in. But he looks fairly determined to me, like he's going to do it, like he's going to get in, and he won't be scared off. So on the Republican side, there's been a little more action in terms of changes. Both of these races also have extremely like well-developed fields among the Democratic candidates, and but they haven't changed or altered in the last few weeks. So in terms of the ones that I see out there working, boy, that U.S. Senate race looks among the Democrats looks very, very active, and like it'll be pretty competitive. So and whereas the gubernatorial race, Benson looks definitely like the front runner, but you have to take sitting Lieutenant Governor Garland Gilchrist, the respect of having a statewide office and being a legit contender for it. But those fields, no substantive changes, at least in the last couple of weeks.
All right, we're still quite a ways out from the election in 2026. So lots of time for things to change. Okay, Brian, it's now Data Monday.
Okay, two things that I'm going to cover for Data Monday today. And let me get to the slideshow. And they're the two things that the interest rates are based on. So the jobs report and inflation. So we're going to start with inflation. This is going to be consumer price index. There's a few other measures of inflation I share sometimes as well. The PCE and the PPI producers and the consumer expenditure index are both, I think, pretty relevant, but they all look about the same in terms of their trends. So what you see here in blue is the consumer price index, the overall, the headline number, if you will, and then the core number, which takes the commodities out, the fast moving up and down commodities. And 2.8, 2.4%, both of those holding pretty steady. In fact, I think you can make the case generally still inching downward toward that 2% target. So that's why I call this pretty good. You want to see it maybe a little bit lower. There are a lot of people that were predicting like, oh, tariffs and stuff, inflation get out of control. That was really, it's not so simple. The world is way more dynamic than that. Usually when I hear those dramatic predictions either way, I kind of tune them out because a lot of times there's politics mixed up in what people want to have happen. But really, inflation is harder to move than just implementing a policy one way or another and having it just automatically move. There are lots of factors that play into this. So I would say this is in a category of pretty good. Not bad, not great, but certainly not bad. Pretty good. And then this is taking the goods, which are in blue, and services, which are in orange. And what's interesting to me here is that for the longest time, goods were actually in deflationary territory where prices were literally coming down. Not a lot, but a little bit. And service inflation was still pretty high. But now we see actually the inflation rate among services finally start to come down, just as goods are tracking upward a little bit. So different look, same data, but separating out goods and services instead of headline versus core. And then here are the categories. This is the year over year. There's a month over month report as well. I think a little bit less insightful than looking at year over year. And so why is the headline inflation lower than the so much lower than the core inflation? Well, right down here, gasoline, 12% down. That's a perfect example of an item that's not in core inflation, but something that there's a lot of gasoline transactions, obviously, and it's a big player in moving these numbers. And those go up and those go down for reasons that aren't just tied to inflation. That's the reason why it's insightful to look at inflation with and without it. And then payrolls, 147,000 up, as you can see. Doesn't, it's in the category of pretty good. You don't look at this and say, wow, what a hot labor market, but you also don't look at it and say, oh my word, the bottom's falling out. This is just kind of a steady, even. In fact, if you're wanting to see inflation inch down, it's a pretty good labor market report. You look at this. Now look at this number here and compare it to this chart here, just going back to the inflation numbers, and you can kind of tell why the Federal Reserve is saying, I think I'm just going to leave this alone for a little while longer. Generally, inflation is coming down and jobs market looks steady. Don't break it because it's not, or don't fix it because it's not broken. I mean, that as you look at these numbers, you can see there's a certain kind of logic to it. I do understand the president's frustration with wanting to see the economy kind of take off and get back to charts that look more like this. I mean, every president wants that. You want to see the jobs market grow. That's how legacies are made. There's the balance here coming off inflation that frankly our society just wasn't used to anymore, is I think made them extra careful. And so people can definitely agree or disagree with the course of action, but when you look at these charts, these aren't there's nothing crazy here. I think they're kind of logical judgment calls. And then looking at the jobs report by sector, of everything that I've shared with you, and this is the last slide here, the biggest surprise is, look, government jobs up 73,000 nationwide. This is one that had fallen back. And so I don't know, I'm not exactly sure how to interpret this. The federal government laid a lot of people off. Did they end up bringing people back and we just didn't hear about it? Is this like other levels of government that have made up the difference or expanded more? I was pretty surprised by that number. I wouldn't be surprised if it did turn out that the feds did some initial layoffs and then kind of reviewed and evaluated things and then brought some people back. I wouldn't be surprised if that was it, but that's conjecture on my part. Education and health services coming in at number 2. As I look at this, though, you'll see government, education, leisure and hospitality, construction, transportation, warehousing, information, financial activities. Those first 1, 2, 3, 4, 5, 6, 7 categories. The first 7 categories, what do they have in common? All service industry. Look at the bottom categories. It's not, there's a mixture, but the bottom half there, retail, trade, utilities, mining and logging, other services, wholesale trade, professional business services, and manufacturing. The goods sections are all in the bottom half. So in terms of production, perhaps a bit of softening, but made up by the service industry. That's why when we look at these things, there's so many sub-stories in how are things going economically in America right now. There's a lot of different ways to look at it, a lot of different perspectives. And it's a reason why you can have dramatic stories told about everything's great and everything's falling apart. And usually the truth lies somewhere in between. And I would say in this case, I know it's not a fun or sexy word, but everything looks fine to me economically. And not nothing to get excited about, nothing to get too worried about in terms of the overarching view of the economy. Underneath that, there are big, big changes. In some places doing exceptionally well, in some places that are really struggling. So we're not strangers to that type of complex analysis here at SBAM because that's our membership and small businesses. It's defies any kind of overarching oversimplification to how things are going. But we will stay committed to keeping you informed on what's happening both in the economy at the state and local level, and playing our watchdog role with especially our state government right now, just to try to we got a few, I think Kelly covered last week, a few concerns that are on the horizon here with some ballot initiatives that we're going to need to be pretty active in fighting off. They could hurt the business climate, but we will stay on top of it through this briefing and our website, sbam.org. Look forward to talking with you sometime soon.
All right, that is the show for today. Thanks everyone for joining us. We'll be back here next Monday at 3 o'clock. Have a great week.